In this video, I'm going to break down the truth about mortgage interest and mortgage payoff and how you can use these topics and this knowledge to your advantage to become mortgage free. By understanding how interest actually works, you can save thousands of dollars on your mortgage, tens of thousands of dollars actually, and cut off years of your mortgage. That can allow you to retire earlier, to quit your job sooner. It gives you a lot of options. It means less stress, more freedom, and more money in your bank account at the end of the day. I'm Mary, and this is Pennies Not Perfection, where we talk about personal finance in a practical and progress-focused way so that we can improve our lives with money without being perfect. I'm on my own journey to financial freedom, and I share everything that I've learned from my experiences here as I can so that you can build a better financial future too. Let's talk about one of the biggest things holding so many of us back, our mortgage and the huge amount that most of us are paying and how we can get rid of it even faster. So why does paying off your mortgage matter? Your mortgage is likely your biggest monthly expense. Imagine owning your home outright and no longer making that big monthly payment. What a relief, and it will completely change how much money you need in order to survive. Paying off your mortgage early can save you tens of thousands in interest and years of payments, years of making those monthly payments every single month. It is something that can make a huge difference in how you feel when you're ready to retire in the future. Let's talk about how mortgage interest works versus the principal. So principal and interest is something that you really need to focus on. Your monthly payment is made up of the principal, which is the actual loan amount that you borrowed. So when you pay back principal, you're paying down the loan. The interest that is part of your payment, the principal and interest, the interest part is what the bank charges you for that loan. So the interest rate is influenced by a lot of factors in the economy, prime rate, bank fees, a lot of different things. And that interest rate determines how much you are paying back on the principal of the loan. The interest goes directly to the bank. It is their fee for letting you have the money to buy the home. And the amount of interest you can pay on a mortgage is a lot. It's substantial. The higher the interest rate, the more money you'll pay overall. And with rates going up over the last couple of years, people are paying a lot more in interest on mortgages these days. You also need to understand the impact of amortization, and amortization is just the length of the loan. So in the US, most loans are 30 years. You can also get a 15-year mortgage, but the longer mortgage of 30 years is standard, and the longer amortization is going to mean lower payments per month, but more total interest paid over the life of the loan. For an example, a $400,000 mortgage loan is $400,000 with an interest rate, let's say of 5%. Let's say you got lucky and you got your loan in one of those spaces in the last couple years where it was 5%. It's gone between 5 to 7% in the last few years. We're in the middle at 6.375, but let's say you got lucky at 5%. And your total mortgage length is 30 years. So the total amount that you paid over time, you've paid $400,000 in principal, the main loan. Then the interest is another $373,000 for a total of $773,000. That is a lot of money. And that $373,000 could almost buy you another house. And it could definitely buy you a long time of not working and having a great life without a mortgage. Okay, so if you understand that interest is a big chunk of what you'll be paying back, let's talk about how to actually pay off your mortgage early. There's really just 3 ways to do this, and this is all available on the internet for free. Nothing in this video is a secret, and we're not going to cover any of the crazy schemes that people come up with in order to pay back mortgages faster. These are just 3 really powerful ways to reduce the total interest paid over the life of the loan and shorten your mortgage term. So instead of 30 years, you'll be paying it back in maybe 10, maybe 15. It's a great way to do it. So strategy 1 is making a lump sum payment. And you can do this multiple times over the loan, but just paying a big chunk of money toward the principal to reduce the amount owed is very helpful. With a lump sum payment, you make a one-time extra payment. Let's say it's $20,000. This will reduce your balance from that $400,000 that we talked about in the beginning to $380,000. The result is that the loan is paid off in 26.8 years instead of 30. So you've saved multiple years of paying mortgage payments, and the interest on your loan drops from that $373,000 to $310,000. So you're saving over $60,000, which is pretty substantial and pretty awesome. You will need to know if your bank allows these lump sum payments, and some banks actually limit the amount that you can pay down per year or in general. So if you have a limit, you need to know that, but making big lump sum payments when you have something like a bonus come in or unexpected money can really shorten the length of your loan and reduce how much you pay in interest. The next strategy for early mortgage payoff is making extra monthly payments every single month. So let's say that you add $200 to your monthly payment. You just round it up to the next amount by adding $200 every single month. You need to know that that money needs to go strictly to the principal of the loan. So make sure that it is going toward that. But when you do this and you add $200 every single month, your loan is paid off in 24.8 years. That's crazy soon and a lot faster than even making a lump sum payment. The interest you pay also drops to $298,000. So you're saving over $74,000 in interest paid on the loan, which is pretty substantial over time. You want to make sure it goes directly to principal, not moving your payment forward. So the final strategy is one that I personally like, and that is biweekly payments. And you can set this up either through your bank, but instead of monthly, you split your payment in two and then pay every 2 weeks. So if your mortgage payment was $3,000, every 2 weeks you would be paying $1,500 instead. This results in 13 payments per year instead of 12. This is because you're making 26 biweekly payments, and that makes 13 payments. The result is one full mortgage payment per year of that 13 goes straight to principal. With this strategy, the loan is paid off in 25.2 years, and your interest amount paid in total drops to $304,500. So again, you're over $68,000 in interest saved, close to $70,000, and that is fantastic. The thing to note about biweekly payments is that you need to be able to do this with your bank. Not every lender allows you to set it up, so make sure you check first and they are someone that is going to allow biweekly payments and apply them properly. I've actually been able to do this at every lender that I've had, so I think that majority of them will allow it, but there are some that still do not. So definitely check with your lender to see if you can implement this strategy. Personally, I like that one because it's easy to do with most people's budgets, because a lot of people get paid biweekly versus once a month, and that can honestly really help most people budget better and still pay off the mortgage faster. So those are 3 strategies for paying off the mortgage faster, but the best strategy is actually based on your individual numbers and your preferences and your discipline. These all require a certain amount of discipline. The biweekly payment is a little bit less than making sure you pay extra every single month on your own. Then the lump sum payments is one that requires a good chunk of discipline, because instead of taking that awesome vacation, you're putting a chunk of money towards your mortgage payoff. The best strategy will depend on your situation, your tax situation, your ability to pay extra per month, and any sort of lump sum payments that come along. So if you are able to do something monthly, then you should be able to do those extra payments every single month. If you are relying on a tax refund to get a windfall, then you would want to do the lump sum strategy. If you want to keep it simple and you think you won't have discipline to actually put extra money toward it on your own, go with the biweekly payments. That is the best option. It really depends on you and what you need. All of the strategies that we talked about paid off the loan multiple years faster, so you weren't paying for 30 years, and they all saved tens of thousands of dollars in interest. In the example that we went over, the best one was the extra payments every single month of $200. It was the shortest term of paying off the loan, and you saved the most interest. However, if that method doesn't work for you, there's other options. All 3 of these strategies have been implemented successfully by many people, and they have something in common. They all involve extra payments toward principal. The only difference is how often and how much that you're paying toward the principal. But either way, the only way to actually pay off a mortgage is to pay more toward the principal, which is reducing the loan. This is going to equal less interest paid overall and a faster mortgage payoff, but you have to figure out how to make those extra principal payments in your lifestyle and in your financial calculations. If you're looking for more financial freedom and the relief of not having a mortgage sooner, then you should definitely try out one of these strategies, or try them all out and just throw as much money as possible toward your mortgage. Paying it off can be a fantastic way to improve your financial future. If your interest rate makes sense to pursue mortgage payoff and you want the relief of a paid off home, these strategies can help. So if you like this video, give it a thumbs up. And definitely subscribe for more on this topic and to watch us pay down our home, as we are also pursuing early mortgage payoff and trying to get our loan paid off much faster than 30 years. Let me know in the comments if you are pursuing mortgage payoff and trying to pay off your loan faster than 30 years, or if you are instead using all of the extra money that you have to invest and build a nest egg that way. Let me know what you're doing in the comments, and I will see you in this video next.